Hey community, thanks for tuning in to another CEO.CA interview. On site with me in Vancouver is Adam Smith of Oroco, ticker OCO on the Venture Exchange. So Adam, can you give us a quick overview, not just of Oroco in general, but Santo Tomas and what you're advancing in Mexico when it comes to copper?
Certainly, I can do that. And thank you for the interview today, Rachel. Good morning.
Good to see you in person.
Nice to see you in Vancouver, yes.
Yes.
Oroco's asset, the Santo Tomas porphyry copper deposit, is a large 1.1 billion ton copper deposit at surface, at low elevation, close to infrastructure in northwest Mexico. We straddle the Sinaloa and Chihuahuan borders. The project has reached PEA stage where it has an almost $2 billion post-tax NPV at today's copper price. IRR is approaching 26 to 28% at today's copper price. So it's a big, robust source of copper, estimated with a 22.6-year mine life, producing 108,000 tons of copper per year, with a lot of optionality. There's 250 million tons in the resource, not included in the current mine plan. There's a 550 million ton resource owned by the Chinese company Tier-1, 14 kilometers north of us. And there's phase 2 drilling coming up, which could expand that resource. So it's a big Tier-1 copper discovery in an excellent location in a country that has just announced measures to turbocharge mining investment. So-called Plan Mexico rolls out the red carpet for investors. So great jurisdiction, great local infrastructure, community acceptance, and revenue approaching $1 billion a year from 108,000 tons of copper per annum, with very, very good margins, clean concentrate that can be shipped through a nearby port. So it's got all the elements, it ticks all the boxes for a big porphyry copper deposit. And I think our interview is very timely because not only are we seeing rising copper prices early in the year, but we're seeing Mexico unveil Plan Mexico, which is a very robust stimulus for foreign investment in the country after a period, admittedly, with the president that was very difficult on the mining industry.
Well, you know, the last time we actually did talk there was talk of jurisdictional risk that we talked about.
Indeed.
So how has that changed with Plan Mexico in general?
So the new president appears to be a very objective person. She's a climate scientist. She's spoken about the need for copper in particular to power the energy transition. And she's been left with federal finances that, quite frankly, could use a little boost. So Plan Mexico seeks to move Mexico from the world's 12th largest economy to the world's 10th largest economy, to attract investment, to attract private investment, to empower the private sector to make investments to lift Mexico's economy. And the prior president had in fact proposed about a year ago a potential open pit mining ban, which posed an existential risk for companies like Oroco. So he was negative on the mining sector, permits had been stalled, and he was particularly negative on the open pit sector. So under the new president, Claudia Sheinbaum, she has signaled almost a complete departure from that. She signaled that mining will get some favorable treatment, that companies could see expedited processes to get permits. She has appointed some very pro-business, very pro-foreign investment ministers to her cabinet. And so we're seeing probably a 180 return in the new administration. We have to remember that Mexico was, prior to AMLO's presidency, considered one of the world's top 5 or top 8 jurisdictions for mining. It had the geological endowment, it had the people, it was one of the highest per capita of engineers in the world. It had the infrastructure, it had a 300-year mining history. Mexicans were proud and are still proud of their mining history. So that was Mexico pre-AMLO. Claudia Sheinbaum looks to be taking Mexico back to its proper position in the pantheon of mining jurisdictions.
Now, let's move on to talking about the PEA recently put out. What are some highlights that you can share with our viewers?
The IRR at $4 copper is 22%. The IRR at $3.50 copper is still 16%. So it's got a good deal of protection on the downside. But as copper prices go up, for every percentage rise in the price of copper, the NPV at Santo Tomas rises by 3.7%. So it's tremendously leveraged to rising copper prices, and there's of course an expectation that copper prices over the next decade will rise quite dramatically.
Yeah. Now you're working towards a pre-feasibility study.
We are. We've got some geophysical anomalies, and mineralization is open in a number of directions. A portion of the resource is inferred. So the next drill program will target lifting the inferred to indicated, as well as converting it, as well as testing these anomalies and where mineralization remains open. We're looking for incremental improvements, to be honest, at a 1.1 billion ton resource and all the other favorable metrics. We don't really need to change that so much as we are looking simply to increase the confidence level from a PEA level up to a PFS level.
Now, M&A activity last year, 2024, was really hot.
It was.
With Mexico jurisdictionally becoming de-risked. Are you having conversations? Are you having some eyes? Are you seeing sharks circle you?
This is one of my favorite subjects because copper M&A, the metrics for copper M&A, has been on my mind since the 1990s. When Oroco started doing the technical work program at Santo Tomas, a London firm, RFC Ambrian, did a research report, and they had done some seminal work on M&A in the modern sector, in the modern period. And they applied some of those metrics to Santo Tomas and suggested either a percentage of NPV or a price paid per unit of copper in the ground. And they gave some pretty impressive numbers. We've got, after all, 4 million tons or 9 billion pounds of copper in the ground. We've got an NPV today at 435 copper that's probably approaching $2 billion. By any measure, whether it's 10 cents a pound of copper in the ground or 30, 40, 50, even up to 80% of NPV being paid in M&A transactions, as RBC Capital recently stated in research in December, we have a very, very valuable potential asset here in a transaction. M&A, as you mentioned, is elevated, has been elevated for the last few years. The majors are looking to strap on additional copper production to their production profiles. They've been focused mostly, though, on existing mines, developed mines, and larger peers. But that doesn't add any new copper production. Their other focus has been brownfield expansion. Again, that only adds incremental amounts of copper. So in order to add new copper production, new mines are going to need to be built. Development stage assets like Santo Tomas are going to need to be bought and put into production. The valuation metrics used by RBC, RFC Ambrian, and others would suggest a $2 billion NPV project like Santo Tomas, if it's bought anywhere between 40 and 80% of NPV. That's a really valuable transaction. Article on CNBC this morning talked about elevated levels of M&A coming. The Globe and Mail published an article last week stating that there's an M&A frenzy, and it ultimately will trickle down to the acquisition of development stage assets, as RBC said last month. So there is something in the air. Copper prices are rising. The timeframes for new mines to be put in production to meet the coming demand, arguably it's already too late to start these mines. It takes several years to put a new mine in production. Several years from now, we're looking at big copper deficits. So surely those timeframes are on the minds of the majors. And even though copper prices have not hit the $5 or $5.20 level that they hit last year, there is a shortage of development stage assets in the pipeline right now. There are very, very few of us around. I would say there's between a dozen and maybe 20 at the very most. But low elevation, good jurisdiction, simple, clean metallurgy with favorable jurisdictional issues and favorable local population. Once you filter out that dozen to 20 group of potential assets, development stage assets, you get down to certainly less than 10, maybe even less than 8. And Santo Tomas ticks all those boxes. It would be among those 8 or 10 developable prospects. Big copper mine, big enough to move the dial for a buyer, in a favorable jurisdiction and a clear line of sight to development. So I would say Santo Tomas is that. A few months ago, I would have cautioned by saying we're still waiting for the jurisdictional issues to be resolved. Now that seems to be happening with Plan Mexico and the other statements by the federal government in Mexico.
Well, Adam, thank you for being here. I'm sure we'll talk in the next few months.
Thanks, Rachel. Looking forward to it. And at the time, hopefully we can talk about the commencement of phase 2 drilling, as well as the path to a PFS for Santo Tomas.
Great.